let's now talk and discuss Kenya, because we've been hearing here in South Africa the noise of democracy at work, people protesting against the power hikes that are proposed for Eskom. But out in Kenya, the financial market there is seen as one of the world's leaders in financial inclusion, mainly due to the emergence and success of mobile money concept, which they are world leaders in. Joining us now live from Nairobi is Paul Muthaura. He's CEO, Capital Markets Authority. Paul, thanks for your time. I imagine this morning I heard you were hobnobbing with big wig officials from the OECD as well as the World Bank, and we were discussing how to include everybody in financial markets. What was the main purpose and what did you get out of those discussions?
Thank you very much. It was a conference of the World Bank, OECD, and the International Network of Financial Education. And it's being co-hosted by the Joint Financial Sector Regulators here in Kenya. Now, our real focus was the appreciation of the change from just investor education and inclusion to the concept of financial capability. So when you take education and you add that to access, and you also ensure usage, then you achieve true financial capability. And that's really now the focus of a lot of the international drive and information, to really focus on making sure that when we deal with inclusion, we're pushing it to its natural conclusion, to making sure that we're ensuring capability of the ultimate holders of these financial instruments.
So from the Kenyan perspective, how far would you say the country is in achieving that?
I think, as you mentioned in the beginning, the efforts with mobile money have made a very significant difference with regard to really reaching out to the all the levels, the lowest levels of the economy, to make sure everyone can have true access to financial instruments. On the securities market side, we've been seeing a lot of moves towards harnessing collective investment schemes and lowering the cost minimum investment in those collective investment schemes to make sure everyone can truly participate. And using, once again, leveraging mobile money to allow for mobile access to trading in securities. And ultimately, one of the ongoing projects is mobile trading of even treasury bills.
Okay, so you have made some inroads, and clearly there's still quite a lot of work that needs to be done. Kenya, of course, is lucky in that a large section of your stock market in particular is driven by retail investors. So there is financial awareness among a large section of the community. But from a regulator's perspective, what more can you do to deepen financial inclusion and to get everybody educated around financial products and issues?
I think it's very much the point on just education and outreach, and also ensuring that products are sufficiently diversified to make sure that all the different potential investors have an opportunity to access the market. One of the big products we're rolling out at the moment is for real estate investment trusts, which will allow collective investment in real estate and really broaden the scope of people who can participate in the current real estate boom in the country. We're also looking at how we're structuring our equity markets, facilitating online access and mobile access to securities trading accounts, to make sure that more people in the farthest reaches of the country will be able to access the securities markets and trade, invest, and increase their savings ultimately.
Yeah. Now, I don't know, Paul, if you watched the debate last week in which President Jacob Zuma and President Goodluck Jonathan of Nigeria were joined on our set here at CNBC Africa by the executive chairman of SAB, Miller Graham McKay. One of the quotes from him that I kept throughout the week was, if you allow the private sector to do what it does best, it will provide solutions for you. And we know that has happened in Kenya, because with mobile money, it was the private sector that led the development of that segment. Is there room here for the private sector to come in and play a role in deepening Kenya's financial markets without actually the regulators themselves expending any money, except creating an environment for them to be able to do what they need to do?
I think very much we're seeing it as a two-pronged approach. We're dealing with not only inclusion, but also consumer protection. So the consumer protection side will undoubtedly need regulator intervention to have appropriate rules. But on the education and access side, we are very clear that it's really the private sector and harnessing and leveraging off the opportunities from the private sector to really increase depth and reach of the education initiatives. So it's truly a partnership to achieve this.
What's the sense, though, that you're getting from the private sector? Are they interested in this? Have you tried them out? Have you tested them out?
Very much so. Even as the authority, when we carry out our investor education initiatives, it's very much in line. We work jointly with the exchange, with fund managers, with collective investment schemes. So wherever we reach out to the counties in the country, we make sure they're joining us and they're able to put forward their own clear positions on education and ensuring suitability of products as they're doing the marketing, so that we can really join together in deepening understanding and appreciation of these products and increase savings and investment through them.
So this conference, you had it with the OECD as well as the World Bank and the other organization you spoke about at the beginning. What can they offer in terms of helping you out in this process?
A lot of it is really helping to bring all the key voices and parties together. This conference is actually for Middle East, North America, and Sub-Saharan Africa. So it's really bringing together all the different voices to make sure that we can speak with commonality and also leverage and learn from each other, so that where there have been successes in one jurisdiction, we can replicate them in another.
Yeah. What about the Muslim community? We know, of course, it's an important segment of the Kenyan environment, because about half the population are Muslim. Are there Sharia-compliant products that you're looking at that potentially will be able to be included in this education process?
Well, the population isn't quite up to 50%, but they are a very significant component. And so as the authority, as the financial sector regulators as a whole, we're all working towards really facilitating Sharia-compliant banking, takaful insurance, and introducing Sharia-compliant, for example, debt instruments in the capital markets. And in line with that, we're looking at establishing, a national standard for Sharia rules. And we're working together to establish a National Sharia Council, which is going to be able to give guidance and direction on the Sharia principles that will be applicable in Kenya, to really tap the potential for Sharia investments. And especially with the proximity of Kenya to the Gulf, we see a true opportunity of turning Kenya into a regional or global hub for Islamic capital markets instruments.